Good morning, everyone, and welcome to the ANAO CFO Forum. My name is Jane Mead. I'm the Group Executive Director of the Professional Services and Relationships Group at the ANAO. I'm standing in today for the Deputy Auditor General, Rona Mellor, as she had an existing engagement and she sends her apologies for not being able to be here today. I would like to begin by acknowledging the traditional custodians of the land on which we meet today, and pay my respects to their elders past, present and emerging. I extend that respect to any Aboriginal and Torres Strait Islander people we have here today. So just a few logistical arrangements to start with. We are recording today's forum and the slides and video will be published on the ANAO website after the event. I'll leave it up to attendees whether or not you want to have your video camera on or off. However, if you could remain on mute during the presentation, that would be much appreciated. If you do have a question, could you please use the raise hand button in Teams? The forum is due to finish at 11:30 this morning, and we are aiming to take a 10-minute break at 10:55. I'm joined by a number of my ANAO colleagues today who will separately present to you as outlined in the agenda. Bola Oyetunji is the Group Executive Director of the Assurance Audit Services Group. Bola is going to present key messages from the ANAO's end-of-year financial statements report, which we expect to be publishing in December. George Soteropoulos was recently appointed as the Group Executive Director of the Performance Statements Audit Services Group. So welcome to the forum, George. George will provide an overview of the ANAO's approach to performance statements auditing. Carla Jago is the Group Executive Director of the Performance Audit Services Group, and she's going to provide an update on the ANAO's performance audit program and outline some key messages from our work. So, what's been happening at the ANAO? In short, quite a lot. At the June 2021 forum, we announced that we had been provided with an increase to appropriation funding to support the delivery of our mandatory financial statement audit program, to rebuild resources to return the ANAO to 48 performance audits by 2024-25, and to deliver a staged program of mandatory performance statement audits. In terms of financial statement audits, we've continued to deliver on our mandate throughout the pandemic. In 2021, the percentage of financial statements signed and the issue of the associated auditor's report within 3 months of the reporting year end increased to 89%. And that was an increase of 10% in the prior year, which was a pleasing result. As Bola will describe, the ANAO concluded for the majority of entities that key elements of internal control were operating effectively to provide reasonable assurance that the entities were able to prepare financial statements free of material misstatement. Bola will speak to some of the findings from our financial statement audit. But in summary, the vast majority of our moderate findings related to IT controls, compliance and quality assurance frameworks, management of non-financial assets, and legislative breaches. Cybersecurity remains a strategic priority for the Australian Government. Bola will also talk through our analysis of compliance with the requirements relating to the implementation of the requirements relating to the removal of access for personnel who no longer have a legitimate requirement for access. Turning to performance audit, our staffing levels decreased during 2020-21. With the additional appropriation funding and the number of performance audits being tabled increasing from 40 in 21-22 to 48 in 24-25, the ANAO has recently undertaken a recruitment round across all staffing levels, with further recruitment rounds to be held in early 2022. We're continuing our performance audit work on COVID-19 topics. Based on the audits we have tabled to date, we are seeing that people are doing their best in an environment of fast decision making. Carla will talk through some of the key messages from our performance audits in the past year in the areas of governance, risk management, and probity management. We are seeing that records management continues to be an issue that we encounter, as is articulating risk tolerance early in the implementation phase of new measures. Establishing probity measures in procurement, including when the Commonwealth procurement rules don't apply, is also something that Carla will speak about a little bit later. Finally, As of 1st of July 2021, the ANAO created the Performance Statements Audit Services Group. This is a new business group which George is heading up, and that group will be responsible for auditing the performance statements of government entities. Internal recruitment has finalised with movement of ANAO employees from various backgrounds of the agency, such as financial audit, performance audit, and audit technical. Internal training for these employees has commenced, and staff members are familiarising themselves with our performance statements methodology. We will be conducting some further recruitment for the performance statements group as we continue to build this group in the future. As George will discuss, the ANAO is due to audit 6 entities in performance statements during 21-22, and this will be an increase from the 3 entities that we've audited during the pilot program. So now I'd like to pass you over to my colleagues for their more detailed presentations. Thank you again for joining us. Thank you for your patience while we sorted out the technical issues. So I'd like to hand over now to Bowler to talk you through his messages from Financial Statements Audit. Thank you.
Thanks, Jane, and good morning to everyone. So I'll be presenting the end of year financial statement report. But overall, I think it's when you see the report next month, it's a good news story. One of the things we've seen is that there's been significant improvement in the timeliness of when we receive financial statements. It's been a very good process. We have access to working papers and documentation for evidence. Again, thanks to everyone in this forum for an excellent work over the period, especially because of the challenges that we all face in lockdowns. The quality of financial statements have also significantly improved. And I think when you look at the way position papers are now presented to us, that has been one of the reasons why the increase or the improvement in quality is being noticed. And we also find that agencies are raising issues early. That means we can walk through some of these challenging issues, in a very focused way. Now, I think the only area of improvement I will, encourage us again, both yourselves and ANAO, is to make sure that there are no surprises, and no one, of course, likes any surprises. So better engagement on some of these issues early will be the theme for 2022. So now looking at the results, just going through the results for the 2021 cycle. As Jim mentioned, we had a very significant amount of opinions that were finalized, before 30 September. And the importance of these two is because, as you'll be aware, we have a KPI of September 30th, to get 85% of the opinion issued, so that it gives agencies enough time, to meet the 15th October deadline to present annual reports to ministers for there to be enough time to be there for estimates. So I think this is a great outcome that we will be able to achieve this. Now, the audit findings, again, we're seeing, have really gone down significantly. So going forward, we'll make sure that once we agree the time, in the audit strategy document, we'll just encourage you to continue to improve on that. So again, thanks to all of you. It's been a good news story. So in the next slide, we will be just talking about the conclusion that Jane mentioned. Controls were operating effectively, and were able to prepare these financial statements that were free from material misstatements. So when you see the report next month, in fact, there was only one qualified opinion, and that carried forward from last year. So again, an excellent effort from everyone. So I'll now provide analysis on some of the audit findings, and you will see that total findings were 165, again, a little bit more than last year, but in terms of the significant ones, I think the significant ones have gone down a bit. So there were two significant findings, and those relate to valuation of non-financial assets and the weakness in financial management. So we'll go through some of these as we go forward. Now, 87% of the findings still relates to IT controls, nothing new, compliance with quality assurance framework, and management of non-financial assets. Now, the legislative breaches are the ones that increased a bit, this year, and I'll give you details in the next slide. So, with legislative breaches, if you look at the trend, we was up, then we improved significantly last year, but then it would back up to a significant amount of legislative breaches, and that is, again, the majority of it relates to remuneration. Now, some of them, a lot of agencies will call technical breaches, but I think working together, we'll be looking to make sure that we improve significantly in this area. So, and again, part of what we'll be going through during this period is to be able to have a strategy about how this can be improved. We had some examples of agencies, especially when we reported some of the non-compliance with the Remuneration Tribunal last year. They got their internal auditors to work on those compliance before we started the audit. So again, these are some of the things that we can make sure that we forward in 2022 to improve the legislative breaches. For quality of financial statements, that has been, the very good news for last year. Significant improvement, and 73% again of the audits of financial statements we received in good time, so that we can finalize, the audits again within the KPI period. The unadjusted differences reduced significantly from 63 last year to 55, and overall we only raised quality of financial reporting in 8 entities, whereas last year we raised on 16 entities. Again, so this right trajectory of what we're looking at. The graph shows from the last 3 years, from 14 to 10 to 8, and that's what we'll be looking at seeing when we go to 2022. Now, as Jane mentioned earlier, we still continue to see cybersecurity as the significant issues. In the next slide, where sorry, I'll go through the typical of annual report. I think we've covered it already. The reason why we're looking at that again is because the JCPAA is having some interest in that at this time, and we're making sure that we contribute to that environment just to make sure that you get your annual reports in good time. But I think that was a very, very positive news in the last year, where a discussion with the audit committee chair and the CFO, allowed us to again immediately respond to the request to get the accounts finalized in good time for the tabling of annual reports. Again, I think that's continues to be a good news story, but just be aware, again, with the so the JCPAA, we need to be on continuing improvements in this area. So you'll see the details in the report next month in terms of the data and the information. Now, so we'll go to IT and cybersecurity. This has been an area we've always talked about, and we, again, in the Portfolio CFO Forum, we've had discussions, and we know that there are areas that this can be improved. Specifically, we looked at the ISM security controls 0430, removal of access. Now, one of the things that we discussed earlier in that forum is the fact that where you have a manual solution to a technology issues, there will always, be continuous problems in this area. So that is an area that, 8 out of the 18 entities we looked at did not have adequate processes to implement the ISM security controls. And the main contributing factors, from our end is because there's a delayed notification of the requirement to remove access, so that when personnel change, there's been that delay and they continue to have access, to the system. Now, sometimes too, there will be certain reasons where contractors come in and go, and there's some reasons why there may be documented process in that area. That is one of the areas that we'll continue to have a review on. We're planning, when we have the Audit Committee Chairs Forum, there will be again a process where that engagement and discussion we need to do going forward. Now, what we also see in the report, financial sustainability, not only when we report, the analysis, to meet present and future commitments, we're also making sure that large surpluses or vice versa are we using taxpayers' money effectively. So that analysis there, we'll continue to engage with finance to look at what this means. How do we encourage agencies to benchmark and have a better financial management system? And one of the findings that we will see that's in the report next month relates to financial management and financial sustainability. So again, this is important, and the CPAA is also having an interest in looking at this. So it's important for us to get this right. So the details you will see in the report will show the analysis of what are the areas we look at. So finally, in this report, again, I think we're just giving you snippets of what you will see in the report. I'm not going to go through all the details, but again, there's nothing much different from last year. So finally, in moving forward to 2021-22, I mentioned that we're not, no one likes surprises. So we will make sure that from our side, there are no surprises, and we engage early to get some of these things done early. Now, the overall, as I said before, was good, so don't get me wrong. But going forward, we'll also continue to look at good preparation of processes, engaging us early, and a few of you have already engaged us for 2022 issues that we are working through our own process here, so that I think we'll get that done. The relationship between the signing and tabling dates, we will continue to look at that. Unadjusted differences is continue to be an area that we will be looking at. There's been significant adjustments over the last year, but I think one of the things we will do better too is to make sure that we engage in the technical discussion early, so that you know which areas will be of concern to us. Now, we will be implementing some of the approaches on reporting on cybersecurity, going forward. We'll be providing the appropriate training to staff in data extraction, transformation, and loading. And that will be when we use population data. There will be a lot of requests that will be coming through to yourselves as we go forward. Now, not only for ANAO and their capability challenges, across the nation due to COVID-19. So there's a rapid growth in the capability. So we have a strategy to go early to make sure we lock in the contracting that we need early. We're also looking at making sure that we have continuous recruitment. And hopefully, in recent times, we've been having successes, but that will be a challenge as you go forward. Now, There'll be focus on integrity matters. And again, as you be aware, ANAO will be looking to design an ethics methodology, and that will be looking at going through some of the cultural areas that we'll be looking at. Now, in terms of financial reporting, so if you look at when ASIC puts areas of focus for the following year, so we'll be looking at consistencies in accounting policies across Commonwealth. So are there consistent policies across provisions? Are there consistent policies across even valuation, WSV 18? Are there consistent policies across net enough of recoveries? These are the things that we'll be looking forward to in 2022. Again, finally, let's engage early. Let's discuss issues emerging early, so that by the time we get to July, August, we're not raising significant issues at that time. I will end it there if there's any question. All right, if there's no question, I will hand over to George, who will talk about some of the performance statement auditor review that we'll do.
Thanks, Bola. And just again, as Jane mentioned in the introduction, I'm here to speak to you about the performance statements audit program, and it is a new business line. As Jane indicated in her introduction, the business line itself started from 1 July 2021, so this year. I'm a bit newer than that even, so I've only been here 6 weeks. So thank you to all of you for preparing to listen to me. I'll just go to my first slide and just give you a sense of what the program's going to look like over the next couple of years. As Jane indicated, for the last 2 years, we've been undertaking a pilot that's involved 3 departments. So we've been auditing the performance statements for the Department of Social Services, the Attorney General's Department and DVA. So we've done that for 2 years. The one thing I would say in those 2 years that is really apparent, there's a significant uplift in capability and performance between years 1 and 2. So that's quite apparent, and I think going forward we'd expect to see new entities coming on, that there will be some teething problems. It is new. I liken it a little bit to the introduction of accrual accounting, where systems weren't mature and processes weren't mature, and they're going to continue to improve. This year, as indicated, we'll be looking to undertake 6 performance statement audits. So we'll be auditing the 3 entities that were already part of the pilot program, so DSS, DVA and AGD. And we will also be undertaking audits of the performance statements for Treasury, the Department of Employment, Skills and Education, and also the Department of Agriculture, Water and Energy. So that's the 6. And on that table, you can see progressively we're going to escalate the number. So by 24-25, we will be looking at undertaking 19 audits. Now, those audits will be of all the departments, current departments, and also 4 material entities. So the National Indigenous Australians Agency, the NDIA, Services Australia, and the ATO. The year after that, in 25-26, we will also introduce an additional 5 entities on a risk basis. At this stage, I can't tell you what the entities are going to be for 22-23 because we haven't done the planning for that. But we will be, as Bola was saying, we want to engage early and often with entities, so we'll be making that known as soon as we possibly can. In terms of the next slide, just a couple of observations here from us of what we've seen to date based on the 2 years of pilot. So the first one there is just around the maturity cycle of performance statements. As I already alluded to, I see this as very similar to accrual accounting. Those first few years, there were difficulties, there were lots of qualifications. The whole profession around CFOs wasn't mature, and that's what we're seeing in this space as well. And I'd expect that to gradually improve over time. We'll be working very closely with the Department of Finance and sharing some of our lessons with them and seeing, what suggestions we might be able to make in terms of the framework and how we mature that and improve that. Efficiency measures is something that the Auditor General has mentioned publicly, and the lack thereof. I think I was speaking with one entity yesterday and they said they have identified one efficiency measure, and I said that's one more than some others. So it's a difficult one. It's not going to be easy, but it is an important part of the framework overall. So we will be looking at that. What we have seen to date in the pilot is a number of proxy measures for efficiency, largely around timeliness. So timeliness is being used as a proxy measure quite frequently. And that's a good start. So we will be looking to build on that going forward. The other one really for me that is important is around preparation processes. For financial statements, very mature, systems in place, processes in place. For performance statements, not as mature. So we have seen a lot of issues in that space. And not just from the perspective of the agencies either, but also from the perspective of the ANAO. So from this year's audit, we are looking to undertake our processes in line with the financial statements audits. So this year, just to give you a sense of perspective, we're still currently finalising the audit opinions for the 3 entities. So we're in November. The Auditor General has given me one KPI, and that is to finish all the audit opinions next year by the end of September. So that means that we're going to release a timetable that's going to look very similar to that for financial statements. So we're looking to have an interim management letter to you by the end of March. We're actually currently preparing engagement letters and strategy documents, which we haven't done at this time of the year previously as part of the pilot program. So just for perspective, the interim management letter for one of the departments we received back on the 29th of October this year. So, you know, quite late in the piece. So a significant amount of, I guess, process re-engineering on our part within the ANAO as well. So that's going to be important, and we'll work very closely with the entities. We'd expect the 3 entities we've audited as part of the pilot to be significantly more mature than the 3 other entities. But speaking with one of the departments yesterday who had undertaken an internal audit of their performance statements, I suspect that sort of thing is going to help moving forward. The other thing there is just QA over performance information. And probably the only thing I'd want to say there is, you know, a lot of entities do use surveys as part of their performance framework. What we have seen is not the strongest of QA across those surveys. So it's something that we've audited on. It's something we've issued opinions and findings on to date, and we'll continue to focus on that going forward. Just last slide. Given it is a new business line and we've only conducted a pilot, I don't have lots of slides. It's just a couple of the lessons. The first one I'd want to flag here is we do expect qualifications. So in the pilot, all statements were qualified. It's just one of those things as we mature the framework that we'll continue to work with entities on. Capability is another issue we've seen. It is variable. Look, as mentioned earlier, we're looking to build here as well. I've got a significant recruitment program underway, and I promise I won't pinch too many people as I see good ones as we walk around to departments. But it is tough. It's tough to get good people. The knowledge around KPIs and performance measurement hasn't been strong. In that regard, we are going to work very closely with Department of Finance on a community of practice to start building that capability across the sector. I've had good feedback on that from the entities that we are auditing, and we'll look to build on that over the coming year. The other thing in all of this is really around, for us, the need for a detailed timetable. I think, you know, as I've flagged, we've been quite late in the process to date, and I really want to tighten that up and make sure that there's a real clarity around when things are going to be done, what the expectations of departments are, what the obligations on us as the ANAO are to make sure you have sufficient time to do the work at your end as well. You know, there is something coming up early in the new year which is also going to create an impact on your resources, and we're aware of that. So we need to build in sufficient stress into that so we can manage that. The other thing I would flag is, in terms of the performance measures that we focus on, it is the accountability measures. So I'd like to just flag a difference between all the measures that you may have in your corporate plan and those that will be subject to audit. There will be some that we won't audit because they're more operational in nature. So while important for your entity, they're not necessarily the ones that are a focus of us and not a focus of the framework per se under the PGPA Act and the rule. So things that might come in there are something around workforce capability. Yeah, they're those sort of really important management, really important organisational things you're focused on, but they're not the accountability measures that Parliament focuses on. That's probably, to be honest with you, that's it for me. You know, like I said, there's lessons on both sides. There's lessons for the audited agencies, but also lessons for the ANAO. We will be releasing an end-of-year report similar to what's released in the financial statements on the controls report. We're looking to have that ready for Parliament in February, and within that we are going to identify those broader systemic issues that we think, you know, will be important for agencies to focus on over the next few years as we mature the framework and mature our methodology. Look, I'm going to stop there. If there's any questions, very happy to take them. But I think my instruction was that at the end of my presentation, we were going to stop for a break. And if there's no questions, we might break for 10 minutes and we'll move then on to Carla. Thanks, everyone.
Welcome back. We might get started again. For those of you that haven't met me before, my name's Carla Jago and I'm the Group Executive Director for Performance Audit Services Group. Firstly, I'm going to give you a little bit of an overview, quite quick, of where we are up to on our COVID-19 audit program for performance audit, then just cover a couple of other general performance audit matters, and then I'm going to just focus on a couple of the key messages that we've had coming out of our performance audits over the last 6 or so months. As I mentioned at the last forum back in June, we're aiming to table 40 performance audits this financial year, and that increases to 42 in the next financial year in 22-23. In terms of our work on COVID-19 topics, that is continuing. As Jane mentioned in her introduction, based on the audits we've tabled to date, we are seeing people doing their best in an environment of fast decision making. We have 6 COVID-19 audits currently underway, and those are international travel restrictions during COVID-19, and you should see that one tabling in the next couple of weeks. The next one I think could win the prize for the longest title of an audit report, which is Overseas Crisis Management and Response, the Effectiveness of the Department of Foreign Affairs and Trade's Management of the Return of Overseas Australians in Response to the COVID-19 Pandemic. That one and the next ones I'll talk about should all table next financial year, but before 30 June. Sorry, next calendar year, before 30 June. We're also doing administration of the JobKeeper scheme, human biosecurity practices for international air travel during COVID-19, Australia's COVID-19 vaccine rollout, and COVID-19 support to the aviation sector. We're also at the moment starting the process to prepare our annual audit work plan for the 22-23 financial year, and as part of that we're considering what the next phase of those COVID audits may be. Turning to a slightly different topic, I just wanted to mention that of late we've been encountering through our performance audits a number of issues in obtaining information, and particularly obtaining that information in a timely manner. In some cases we've had our access powers questioned. In others, the granting of remote access to systems has been resisted, not by the area we're necessarily auditing, but generally by the security or IT areas. And often it's taking quite an extended period of time to actually get some of the data we've requested, and it seems to be going through multiple layers of consideration and approval within entities. In most of the cases, it actually seems that it's stemming from staff not understanding the ANAO's access powers. And this has actually resulted in quite a lot of senior time, both on the entity side and the ANAO side, in trying to work through the issues and get that education in place. So I'd really encourage you to help with the education of staff within your organisation around our access powers. We're also very happy to come and talk at any point to any groups of staff, your executive, whoever you think may be useful, to talk about our approach to undertaking audits, because we see that the easier we can make access for us to information, the less burden it is on you as the entity being audited. So it really is in all of our favours to make it as smooth a process as we can. I thought I'd also mention, because we've had a couple of questions on it recently from elsewhere, that we do use the full range of our audit products to provide assurance to the Parliament. So being CFOs, you know, there are some areas we look at through our financial statement audits. There's others where we decide a deeper dive would be appropriate, so we do a performance audit, and now we've also got the performance statement audits that George spoke about, and we also do information reports as well, which aren't actually audits but provide information to the Parliament. One recent example in the last 12 months or so was around the purchase of the Leppington Triangle land. So we actually did work on that through our financial statement audit, decided that actually a more in-depth audit is probably appropriate in this circumstance. So we then did a performance audit leveraging off the work that had been done through the financial statement audit. We do plan to continue that approach. So I just wanted to make sure you were aware that we do that. We don't always go from looking at something in a financial statement audit to go into a performance audit, but it is an option that we have. Turning now to some of the key messages from our audits in the past year. At the last forum, I ran through with you the key messages from two of our most recent Audit Insights products. So that was around administering regulation and insights from the Australian Government's COVID-19 response around emergency management. So I thought, since I'd covered those topics last time, today I'll cover some key messages around governance, risk management and probity management. The three areas are quite interlinked, but I'll try and deal with each of them a little bit separately. So turning first to governance, arrangements to provide senior leadership assurance are essential for the effective oversight of enterprise level initiatives, especially where you've got a devolved business as usual implementation strategy. We've observed through our work that leveraging existing governance and operational mechanisms from established entity frameworks, policies and procedures can really provide an effective means to support rapid implementation of measures, so you don't need to start from scratch in setting up your processes. Effective governance arrangements for significant projects and implementation of recommendations should include the assignment of responsibility and reporting arrangements that provide the accountable authority with a clear line of sight around implementation. And entities should ensure that appropriate assurance arrangements are in place to test the effectiveness of risk controls and treatments during and at the conclusion of relevant activities. And where programs are intended to implement risk controls and treatments, a post-implementation review can be really useful to provide assurance on the extent to which those measures have implemented those risk controls and treatments. When you're establishing working groups, we've observed that governance committees really need to provide some clear direction about the scope of any proposed works, including being really clear on what the outputs and delivery timeframes are. It's also really good practice for any working groups to establish terms of reference or something similar that outlines their scope, their operating processes and their reporting arrangements. And governance committees really should monitor the operation of working groups and then stand them down when they're no longer needed. To effectively monitor actions initiated by governance bodies, we see that secretariats should adopt a disciplined approach to clearly and comprehensively recording decisions and actions, and that should include deliverables and timeframes, assigning responsibility for actions, following up with the responsible parties, and then recording the reasons that actions have been assessed as closed, or if it's not been completed, the reasons for that. As a matter of good administrative practice, entities should review and update instruments of delegation whenever organisational changes are made to ensure that staff making decisions are actually exercising authority that's been clearly assigned to them. We often see that delegations aren't updated as major organisational change occurs, and so the delegations can be quite unclear. We've also seen that entities should avoid proliferation of guidance material, because that can actually make it more challenging for staff to find the right guidance document if there's a lot to choose from. It also creates that downstream burden of having to keep all of that information up to date. So from our perspective, we think guidance material should be quite focused, it should be up to date and needs to be able to be easily located by the people that need to use it. One area that we've seen needs a bit of closer attention is the monitoring and implementation of parliamentary recommendations. So we generally find that entities have some pretty good processes in place for monitoring ANAO and internal audit recommendations, but not so great processes are in place for parliamentary recommendations. So the tabling of responses to parliamentary recommendations formalises the government or your entity's commitments to Parliament to implement those recommendations. So if you have parliamentary recommendations, you should develop implementation plans that include actions that will ensure the intent of the recommendation is met. And effective monitoring of that requires an approach that accurately tracks progress and records the actions of the business area or whoever is responsible for the implementation. Agreeing to implement a recommendation means that the entity is acknowledging something can be improved. Our view is that entities shouldn't agree to recommendations with qualification or in principle when what you really mean is we disagree with the recommendation. If you disagree, we think you should say you disagree and you're not going to implement it. Implementing a recommendation in its entirety will assist the entity to realise the full intent of the recommendation. And if you agree to a recommendation with qualification, you do need to make it really clear what portion of that recommendation you accept and are going to action, and what portion of it you don't accept and are not going to action. Another area that we've talked about before but keeps coming up in our audits is records management. So transparency, accountability and informed decision making is supported by the making and keeping of records. And so this includes the creation of good quality information that contains sufficient detail to meet both your current business needs, but also enables it to be found when it's being looked for in the future and also understood by others. So it's got enough information in it that people can understand what's actually happened. An effective electronic data and records management system really is essential for the management of your digital records. So the National Archives of Australia does not consider that network drives are acceptable for the storage of official records. But we are still quite regularly seeing data being stored on personal or network drives rather than in the official EDRMS. So I'd encourage you in your entities to look at what is being stored where. In terms of risk management, we have seen risk management most effectively used when risks that aren't within our documented risk appetite or risk tolerance are identified and then effectively treated. So the concept of risk tolerance assists entities to make informed decisions about whether further mitigation strategies are required in addition to existing controls. And if they are, what level of resourcing should be applied to that? So articulating that risk tolerance early in an implementation phase of new measures provides a sound basis to support risk management, including the best use of your resources. The rationale for setting that particular risk tolerance should also be clearly documented. So both, going back to my point on records management, evidences your decision making, but it also helps to support the subsequent assurance activities that you might need to have in place. A particular risk area that we've seen is transacting with related parties, which as CFOs, a number of you would have seen related party transactions. So related party transactions can increase both your financial and your non-financial risks, and that includes risks associated with financial management, fraud, including the perception of fraud, and reputational risk. So where procurements involve companies owned by board directors or key management personnel, they should be managed proactively and very transparently so that you can reduce the risk of those, the likelihood, of those risks being realised. So again, around documentation, this includes documenting all the steps that you've taken to manage potential or actual conflicts of interest, and clearly documenting the rationale for approving transactions where those board directors or key management personnel may obtain a financial benefit directly or indirectly from a procurement. This then leads quite nicely into probity. In August of this year, we tabled an audit called Defence's Administration of Enabling Services Enterprise Resource Planning Program Tranche 1. This probably sounds fairly bland, and I wouldn't be surprised if none of you have actually read the report. But there are a number of lessons in there for all entities that I thought I'd spend some time outlining here. The audit focused on probity in the procurement processes for what they call the Tranche 1 Systems Integrator for their Enterprise Resource Planning Program, or the ERP. But during the course of the audit, we identified a number of specific probity issues that relate to the management of probity in the program more generally, so not just in relation to the specific Tranche 1 Systems Integrator we were looking at. The issues related to the management of conflicts of interest, use of panel arrangements, gifts and hospitality, and the use of official information. And they are quite relevant to every entity. So I'm going to run through those in a little bit of detail for you now. So in relation to conflict of interest, there were 3 main issues identified, but I'm going to focus on 2 of them today. So the first related to the decision-making arrangements of the actual ERP program. So the ERP program involves a very large number of contractors that work across all parts of the program and at all levels of decision making. Defence has interspersed their departmental officials across the program to help them discharge their responsibilities. So, for example, their change control board, which is a decision making body, has 3 departmental officials alongside 11 contractors, and that included 4 IBM personnel. And they considered program changes, including changes to contracts, including the IBM contract. So in 4 of the 26 change control board meeting minutes that we looked at as part of the audit, where decisions were made, there were no departmental staff present. So it was only contractors making those decisions. The average level of Commonwealth representation at those change control board meetings was 1 departmental officer, with the average total attendance number of 9 attendees across most meetings. So 1 departmental and 8 contractors. So a low level of Commonwealth representation across a contractor-led or contractor-heavy program can create some oversight risk for the responsible entity, because it's the responsible entity that remains accountable for the proper use and management of public resources under the PGPA Act and for decision-making in the Commonwealth interest. Those program change arrangements also gave rise to both real and perceived conflicts of interest, because those contractors were involved in substantive decision-making processes, and those processes often related to their own contracts. So, for example, the board had IBM representation at each of the 31 change control board meetings that we looked at. The meeting minutes show that program change requests relating to price impact variations, so not impacts on just timing or something else, but actual dollar changes to the contracts for IBM were approved to progress to the next stage at 6 of those meetings. Those resulted in 4 contract variations that came to a total value of just under $500,000. The meeting minutes don't show any record of any conflict of interest declarations by anyone that was in attendance, and they also don't show that those IBM representatives recused themselves from being involved in that decision making. The second conflict of interest matter that we talk about in that report relates to a senior program contractor. So in September 2020, a potential improper use of their position and conflict of interest issue was brought to the attention of Defence senior leaders around this person. It involved an allegation that that senior program contractor had discussed their partner's employment situation with another contractor in the program, and subsequent to that discussion, the senior contractor's partner was employed by that other company. The Defence Audit and Fraud Control Division investigated that, and they did find that there had been a breach of defence policy by them failing to declare their perceived conflict of interest as was required under their contract. The investigation identified that the key contributor to that issue was a lack of support through induction and training, and that Defence needed to ensure that contractors are educated to have a full understanding of defence policy and governance requirements. And I think that's probably a lesson that every entity could take on board. Subsequent to the investigation, the individual did complete a new conflict of interest declaration, but that wasn't done till 5 months after the fact, so it wasn't actually followed up in a timely manner. We also identified through our processes that that same person was a company director of an SAP consulting firm, and this was an SAP program, and that directorship had also not been declared, and Defence advised us earlier this year that they had taken action on that matter. As a result, Defence has now implemented a contractor integrity framework for contractors working within their Chief Information Officer group. So again, that could be something that other entities may wish to consider. I'll turn now to the use of panel arrangements. So as you'd be aware, a panel arrangement is the end result of a procurement process where a number of suppliers are appointed through a contract or a deed of standing offer. And where there's a panel arrangement, procurement can then take place directly with just any supplier on the panel. In the ERP program, what they call above the line contractors are largely recruited through labour hire firms from Defence's procurement panels. So these above the line contractors provide specialist skills and support to Defence and operate on what they call the client side on behalf of Defence, and assist with managing the below the line contractors who are mainly the systems integrator and their technology partner. So they're there to try and help Defence to make sure that the required capability is delivered. A number of those above the line contractors are in quite key roles in the program and perform key program functions. So they might be delivery leads that are working with Defence business leads. We identified a number of instances of individuals being recommended for a role within this ERP program by one of the contractors already in place because they previously worked with this person. The evidence we could find indicated that those individuals who were not on Defence's panel were then matched with people on the Defence panel and engaged without any broader approach to the market. This approach reduces competition and therefore makes it very difficult to actually enable an entity to say they've received value for money. As we noted in an audit report back in 2021 around the establishment and use of ICT-related procurement panels, procurements from panels and similar arrangements are often perceived as requiring less time and effort than going to an open market approach. But we do not think that panel use should be used to eliminate competition. It's really essential to bear in mind that when you're using a panel, each use of the panel is a separate procurement, and entities need to ensure they adopt processes that aren't just technically compliant with the CPRs, but are also consistent with the intent of the CPRs, and that is to drive value for money through competition. I'll turn now to gifts and hospitality. Defence's financial policy on gifts and benefits sets out that offers of hospitality can only be received if it assists Defence to develop and maintain constructive relationships with stakeholders and does not give rise to either an actual, potential or perceived conflict of interest or compromises the reputation of the Australian Government, the APS or Defence. So the ERP Program Management Office was responsible for managing contracts for that program. So accepting hospitality from one of those vendors could give rise to a conflict of interest. And that risk arises for both Defence personnel and contracted personnel. So the policy requires gifts and benefits, including hospitality, to be recorded on their gifts and benefits register unless it's a genuine working meal. The policy does not require offers of hospitality that have been declined to be reported. So the ANAO looked at an extract of Defence's Gifts and Benefits Register in May of this year, and it documented 8 instances of hospitality related to this program. We did a further review of Defence records and identified a number of other instances where program personnel had been invited for lunch or dinner or drinks by a vendor on dates other than those that were shown in the Gifts and Benefit Register. So in respect of those instances, it appears there was sometimes a misinterpretation or a misunderstanding of Defence policy, and while personnel had actually accepted that hospitality, they didn't realise that they had to report it on the Gifts and Benefits Register. There were also some instances where it actually couldn't be confirmed whether the event had actually taken place. So we could see the invitation to attend. We don't know whether the event actually occurred. If I turn now finally to the use of official information. In the course of reviewing Defence documentation, we identified quite a number of instances of senior program personnel sending Defence information relating to this program from their Defence email accounts to other external email accounts, generally accounts that were in their own name, so personal accounts or accounts they held with another employer. So we looked at the email caches of senior ERP personnel and identified quite a number of instances where information wasn't handled in accordance with entity requirements. So this included numerous instances of emails up to classification of protected being sent from Defence accounts to people's personal or non-Defence email accounts. And these emails related to the monitoring, reporting and operations of the ERP program, as well as some documents relating to technical architecture. Most of those emails included attachments, and quite a number of those emails misused security classifications to enable them to go to an external email account. So they were misclassified at a lower level to enable them to leave the Defence environment. We brought these matters to the attention of Defence's Audit and Fraud and Control Division, and they have taken follow-up action in relation to those. So from all of that, some of the key learnings for entities from this audit are we've got contract management processes that include contractors in decision-making roles. You need to ensure there's an appropriate level of control from the Commonwealth and robust conflict of interest processes. Particular care is required when there's a risk of contractor involvement in the management of their own contracts. For programs that rely heavily on contractors, consideration should be given to the nature of the roles the contractors are undertaking and how program governance arrangements are structured to ensure that there is an appropriate accountability framework in place and the potential conflicts of interest are managed. And entities also need to ensure there's appropriate support to contractors through induction and training to ensure contractors are educated to have a full understanding of entity policy and governance requirements, especially in relation to communicating official information and other probity requirements. So I'd really encourage you to go back to your organisation and ask who in your organisation is oversighting these types of matters for contractors that are engaged in your entity. There are, of course, themes and messages from a number of our other audits, but I'm going to leave it at that for today, but I'm happy to take any questions anyone might have. If not, we have finished with 8 minutes to spare. So thank you all for attending today. Oh no, I thought it was a hand up, it's a flag. Thank you all for attending today. If you have any feedback on areas you'd like to hear about in future sessions or any feedback on today's session, we'd be very happy to hear it. You can use any of your agency contacts or through the external relations email that you've got from receiving the invitation. So thank you, and we'll see you all in 6 months. Thank you.